Guys, this is S&P 500 Technical Analysis for the week of January 17th, 2023. What we knew last week is that on Monday, this kind of candle is expected to form. Something like, this kind of candle on Monday. This kind of candle on Monday. As we have seen that this kind of candle was expected to be formed on Monday and it did. Other than that, what we knew is that any upward movement, whenever there comes an upward movement, first of all, it has to breach the boundary of the Chimoku cloud. If it fails to breach the boundary of the Chimoku cloud, in that case, it is expected to come down, right? But if it is able to breach, then we will wait for two consecutive closings. Because if there comes two consecutive closings, then only we will consider this as a short-term bull movement. Now what we can see is that the S&P 500 has again regained its short-term bull movement. I repeat, short-term bull movement. The long-term movement is still bearish. So there is a short-term bull movement in the long-term bearish movement. This means that this the short-term bullish movement is going to form a lower high. Once again, a lower high, just like this one, a lower high, then there will be a fall. Again, a lower high, and then there will be a fall, because the S&P 500 and the entire stock market is in the long-term bear trend, right? So in this technical analysis of the S&P 500, we are going to see this the long-term bear trend and the short-term bullish trend, how it is going to work, what we can expect on Tuesday, because the next week is going to be a short week from Tuesday to Friday. So what we can expect, other than that, the earnings, which companies are going to post the earnings, whether these companies are going to create any problem for the stock market or not. Then this is the bullish movement, where it is heading to. And other than that, there are these the saturated technicals that are going to force, that are going to compel the S&P 500 to give a bearish movement. So this is again what we are going to talk about in this S&P 500 technical analysis. So guys, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And because this is the weekly technical analysis of the S&P 500, however, if you want or if you need this the daily analysis, the daily updates of the S&P 500 on the daily basis from Monday through Friday, in that case you can join my YouTube community. So in this the YouTube community, I give the daily updates, the daily analysis, the daily probable movement of the S&P 500. In order to join my YouTube community, you can click on this the join button that is there just below the title of this video, that is S&P 500 Technical Analysis. Now guys, we are going to discuss the agenda of this S&P 500 Technical Analysis. And in this agenda, the first point of the agenda is S&P 500 Technical Analysis on the weekly chart. Weekly chart means the big picture, the broad picture, the hawk-eye view. So I have mentioned that there is the long-term bearish trend. That the S&P 500 is in the long-term bearish trend, but in the short-term bullish trend. So this is the long-term bearish trend, it comes through the weekly chart. This is the short-term bullish trend, it comes through the daily chart. This is the daily chart. That's the difference, right? So this weekly chart means a trend setter. Then comes the second point of the agenda. The second point in this, the agenda of S&P 500 Technical Analysis, it is the CPI, core CPI data, inflation, and the stock market. So recently we have noticed that the CPI data, it was 6.5 and it was much better than the previous one. The previous one was 7.1. So there was a decline. Other than that, there was also the decline in the core CPI. So we are going to see that how the CPI and the core CPI data is going to impact the inflation, whether the inflation is going to come down any further or whether there will be a retrace or a rebound in the inflation in the coming month, and how it is going to impact the stock market and how it has actually impacted the stock market. The entire stock market means the Dow Jones, the S&P 500 and the Nasdaq, right? Then comes the third point of in our agenda of this the S&P 500 Technical Analysis, and the third point is the support and resistance levels for the S&P 500. Once again, if you have subscribed to my channel, then you might have noticed that the support and resistance levels that I give you, these are my calculated support and resistance levels, not the usual one, that you can find anywhere. And these support and resistance levels are extremely sensitive. Extremely sensitive means whenever the S&P 500 hits these the support and resistance levels, then you will notice that there comes a break or a reversal, or this a hold, means something happens in the S&P 500 and in the entire stock market. right? So I will give you these are support and resistance levels and then the probable zone. Then comes the fourth point in our agenda of this, the S&P 500 technical analysis. The fourth point is the S&P 500 technical analysis on the daily chart. Remember this thing? Okay, the long-term bear trend comes through the weekly chart. The short-term bullish trend, this is the short-term bullish trend, it comes through the daily chart. So daily chart will tell us that what is going to happen, what is happening in the short term. Short term means a week, 2 weeks, okay, or 10 days or 7 days, 8 days. Okay, that's it. That is the short term. So this short term, it comes through this, the daily chart. Okay. Now comes the last point of this, the agenda of this, the S&P 500 technical analysis. And the last point is probable movement of the S&P 500 from January 17th, that is Tuesday, to January 20th, that is Friday. So in this last point, I will tell you that what we can expect from the S&P 500. For example, last week I told you that on Monday we are expecting this kind of candle, and it was there, right? Similarly, in this, the probable movement, I am going to tell you that what you can expect in the coming week, how the S&P 500 is going to behave, and why we are expecting a bearish candle, a fall in the entire stock market, and what will happen after that fall, and how the S&P 500 and the entire stock market is going to behave, right? So these are the things that we are going to cover here. So these are the 5 points in our agenda of S&P 500 technical analysis. Now guys, before I proceed to this, the point number 1, I want to make this thing clear that this S&P 500 technical analysis is not a financial advice of any kind, in any form or in any manner. Secondly, whether you are making 100% profits within a day or you are seeing 20% losses within a day, these profit and losses are all yours, because I do not know how you are going to interpret my S&P 500 technical analysis. However, I try my level best to make each and everything clear in this S&P 500 technical analysis, but still I do not know how you are going to interpret my S&P 500 technical analysis. Now guys, I am going to begin with this, the first point that is there in our agenda of the S&P 500 technical analysis. And this, the first point is S&P 500 technical analysis on the weekly chart. Let's see how the S&P 500 is going to behave on the weekly chart. Now guys, this is the first point of our agenda of S&P 500 technical analysis. And this is the weekly chart, W as in weekly chart. So now guys, I'm going to do this, the technical analysis on this, the weekly chart of S&P 500. And guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to get these, the daily updates, the daily analysis of the S&P 500, the probable movement of the S&P 500 on the daily basis, then you can join my YouTube community. And in order to join my YouTube community, you can click on this, the join button that is there just below the title of this video. Now guys, in this, the weekly chart of the S&P 500, what you are going to notice is that there is a bullish candle on the weekly chart, a bullish candle. And the closing of this, the bullish candle, is almost around or equal to the high of the candle, right? This indicates that there are bullish sentiments in the market, in the stock market, right? In the S&P 500, these are bullish sentiments. So technically, what you are going to notice is that this is the median of the Bollinger Band, this is the upper band of the Bollinger Band. Through the Bollinger Bands, S&P 500 is clearly bullish because it is trading between the upper band of the Bollinger Bands and the median of the Bollinger Band, right? Then comes the moving averages. If you notice that there a clear fan out in the moving averages is still supporting a bearish trend, no crossover in the moving averages, just okay, this is bearish. Moving averages are clearly bearish, no crossover. However, the closing of the S&P 500 is above the moving averages, just like this. Okay, this is the previous case. Okay, but again, we have seen that it came down, right? That is why I'm saying that we are in the short-term bull trend. So this, the upward movement of the closing of the candle above all of the moving averages is saying bullish, but the pattern of the moving averages without any crossover is saying that it is bearish. That is why through the EMAs, through the moving averages, through the EMAs, S&P 500 is neutral. It is neutral. Now comes this, the Ichimoku cloud. Because the S&P 500 is trading below the Ichimoku cloud, it has closed below the Ichimoku cloud. This means that the S&P 500 is bearish through the Ichimoku cloud, right? Now let's see what other technical indicators are saying. So when you look into these, the other technical indicators, first, this one is the MACD. MACD is more than the signal. MACD is more than the signal. What is MACD? MACD is moving average convergence divergence. And if you notice in the MACD that there is not enough convergence or divergence, this means that still there are chances that the S&P 500 can move up or it can come down. Okay, so the MACD is not saying that particularly that it will move up, or it will come down, but it is saying that MACD is supporting both the bullish and the bearish. However, because the MACD is more than the signal, this means that the MACD is directionally bullish. It is directionally bullish, remember. But when you look into the numbers, okay, here in case of the MACD, both MACD and the signal both are negative. Both are negative, indicating that the long-term trend is bearish. Long-term trend is bearish. Okay, this is the directional movement that is there in the S&P 500. Okay, it is for the short term. MACD is more than the signal. It is directionally bullish, but for the short term. I repeat, the short term. Long term, because the number themselves are saying negative, means the long term it is still bearish. Now comes the stochastic RSI. Because of the formation of this the bullish candle, or this the heavy bullish candle, there is a confirmed crossover in the stochastic in the K channel and the D channel of the stochastic RSI. K channel is more than the D channel. What? K channel is more than the D channel. This indicates that the S&P 500 is clearly bullish through the stochastic RSI, right? Then comes the divergence. Divergence is normal, not a problem. Then comes the directional movement. The directional momentum. Directional momentum is also kind of supporting the bullish movement. Okay, in the short term. Okay. So now what we have seen is that the S&P 500. Okay. So we have seen that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is neutral through the moving averages, or EMA. Okay, EMS, exponential moving average. So S&P 500 is neutral through the exponential moving average, EMA. S&P 500 is bearish through the Ichimoku cloud. It is clearly bearish through the Ichimoku cloud, right? S&P 500 is directionally bullish through MACD, directionally bullish. Okay, so it is, we can say that it is weak bullish. It is directionally bullish, but it is weak bullish. Then the stochastic RSI, S&P 500 is bullish through the stochastic RSI, right? So what we have noticed is that, or what we can notice here is that the S&P 500 on the weekly chart, S&P 500 is like 60% or 70% bullish and 30% 30 to 40% bearish. Okay, now why I'm saying that 30 to 40% bearish, okay, or it is in this the long-term bearish trend? Because if you notice that the S&P 500 is continuously trading below the Ichimoku cloud. Below the Ichimoku cloud, this side of the Ichimoku cloud is all bearish. It is in the bearish zone of the okay, through this means the S&P 500 is in the bearish zone. Okay, because of this the Ichimoku cloud. It is continuously for last many months, for like since May 2022, S&P 500 is continuously trading below the Ichimoku cloud. It is in the long-term bearish trend. So the long-term trend will remain bearish. No change in the long term. This the long-term trend. It is bearish. However, in the short term, we can see that there are 60 to 70% S&P 500 is bullish. It is neither absolute bullish nor absolute bearish. Simple. Okay. Long-term trend is bearish. No doubt about that. Now guys, let's move on to the second point of the agenda of this S&P 500 technical analysis. And the second point is the core CPI data, inflation, and the impact of the inflation on the stock market. Let's see how this the inflation, okay, this the decline or this the decrease in the inflation is going to impact the stock market in the coming weeks or in the coming months. Now guys, we are here, and this is the second point of the agenda of our S&P 500 technical analysis. So we are going to talk about the inflation, okay, through the CPI data and the core CPI data, the inflation, and also because see, this is the technical analysis, means the technical indicators. So we are going to look into this the inflation through the technical indicators, through these the technicals only. See, we do not know that what will be the next, this the CPI data or the core CPI data, and once again, we do not speculate and we never speculate. Okay, that is why we stick to our technicals, and whatever our technicals are saying, this is what we can expect. And guys, if you subscribe to my channel and if you have watched the previous the S&P 500 technical analysis after the release of the CPI data for the month of November, then I mentioned that because we have the technicals are still supporting. Technicals are still giving some room, okay, that there is a possibility that the inflation can further cool down. Okay, however, because the technicals are saturated, so this means that either from this month or from the next month, there will be an expected reversal in the inflation. Okay, but still there is some room that the inflation can cool down, it can come down, and you can clearly see that it has breached the moving averages and it is now coming towards, okay, this is the next moving average, right? So this is what we knew through the technicals. Again, we do not speculate and we never speculate. Whatever technicals are saying, we just follow the technicals. That's it. So guys, before I begin, once again, okay, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want the daily updates, the daily analysis of the S&P 500, this is the probable movement on the daily basis of the S&P 500 from Monday through Friday, then you can join my YouTube community. And in order to join my YouTube community, you can click on the join button. For the last month, the inflation was 7.10 for the last month. This was the inflation, right? This time, the inflation, it has further declined to 6.50, right? So there is the decline in the inflation. This is the inflation, right? However, because of the recent comments of the Fed chairman himself has repeatedly mentioned that that there will be rate hikes in the year 2023, but there will be no rate cuts in the year 2023. Means even if there comes the good data, then this good data is also not going to help the stock market as such. But if there comes a bad data, then bad will be the worst, because the Fed chairman himself has said that until and unless we see that the inflation has substantially, it has come down, and it has come down to the levels from where it is not expected to retrace, or it is not expected to move up, then only the Fed's means they can think about, okay, these are rate cuts. Okay, so there will be no further rate hikes but the rate cuts. That will happen only and only once the Feds are satisfied that this is the decline in the information, that this is a decline in the inflation. Okay, it is constant, it is happening, and now there are no more chances that the inflation will move up. Okay, once this thing is there, then only Feds can go for the rate cuts. Other than that, the second factor that the Feds are going to consider is the gap. What the gap? This is the gap between the job seekers and the job providers, the job seekers and the jobs available. Once this is the gap, okay, once this the gap is filled, then that will be the time, okay, then also where the Feds can think about, okay, for going for the rate cuts. But as of now, if you notice, the recent data says that still the jobs available are more than the job seekers. Means that people can easily get the jobs. Jobs are available in the market. Okay, this means that people, because jobs are available, people are going to get the jobs. This means that the inflation means whatever you are seeing here, this is a decline in the inflation. This is not real. This is not real decline in the inflation. This is not real, right? Why this is not real? Because there are jobs available in the market. Because there are the jobs available in the market, this means that the job seekers, they can find, or they can get the jobs easily. They can get the jobs easily in the market. Because they are getting the jobs, this means that the producers, whosoever is producing any kind of, or whosoever is offering any kind of products or the services, they can keep the rates high. They can keep the rates high, okay, of everything, okay, of everything, even for the basic commodities, everything, they can keep the rates high, because they know that people are getting the jobs and people have the money in hand. People have the money that they are going to spend, because the people have the money. Okay, this means that they will pay whatever price, okay, the producers are asking, okay, or the companies who are providing the services or the products they are asking. So people have the money, people are getting the jobs, people have the money. This means that they can charge the people whatever, okay, they want to. This means that this decline in the inflation is not real. That is why, That is why Feds are saying that until and unless, okay, this thing is fixed, the gap between the jobs available and the job seeker, means until and unless they make sure that there are more job seekers and less jobs available. Again, more job seekers and less jobs available. Okay, then so they cannot trust this the inflation, right? Now how this can be possible? More job seekers and less jobs available. This is possible when the Feds raise the interest rates. This rise in the interest rate, it helps the economy to slow down. To slow down to what? To slow down to move into the recession. When the economy moves into the recession, then businesses will stop hiring or business will reduce. Okay, this the number of staff. Businesses will fire the employees. Okay, currently we are seeing that the big companies, they are firing like 10,000 employees, 20,000 employees, etc. Okay, so that the firing is going on. Okay, but it's still there. The gap is still there. The gap is still huge. Okay, so with this the rise in the interest rates, Feds are going to ensure that they are going to slow down the economy. Recently the Fed chairman in Sweden, he has confirmed that their actions, means the actions of the Feds, are slowing down the economy. Okay, and it has significantly slowed down the economy, but still the job market is strong. That is creating the problem. This is creating the problem, means they need to further increase the rates, interest rate. They must raise the interest rates in order to further slow down the economy, to push the economy into the recession. Because once that happens, then only the jobs available will be less as compared to the job seeker. Then there will be more job seekers, less jobs available. More job seeker means that now people do not have that much money or enough money. This means that the producers, okay, whosoever these the product and the services they are offering, they will have to reduce the prices. They have to slash down the prices. Once they slash down the prices, then the inflation will cool down. Okay, this is the cycle. This is the cycle, right? And this is how this is going to work. So do not expect that the Feds are going for, there's a pause in the interest rates, or for this the or these the rate cuts. And the Fed chairman himself has confirmed this thing. So whatever the Fed chairman says, okay, and whatever the data is published, so whatever he says is much more valuable, okay, rather than the data. Whatever is data is published, okay, whether this the data is good or bad doesn't matter, because once the Fed chairman has said that this is how the Feds are going to react, this is how the Feds are going, or this is how the Feds are planning the things, then the stock market will react to the comments of the Fed chairman, not to the data. Okay, for the short term, intraday, 1 or 2 days, the market, the stock market can celebrate, okay, or can give this the heavy bearish movement, okay, intraday, 1, 2, or 3 days, but eventually the stock market will align itself to the comments of the Fed chairman. Simple, right? Now let's talk about the inflation, the core data, the CPI, the core CPI, and the inflation, right? Now, technically, when you look into the inflation, then what you are going to notice that there is a clear fan out in the moving averages, supporting a bullish trend in the inflation. However, the closing of the inflation is in between the moving averages. This means that the inflation is in the conflicted zone. This means that inflation will be considered as bullish through the EMAs. Through the moving averages, inflation will be considered bullish. Simple. Okay. Other than that, if you notice that this is the lower band of the Bollinger Band, this is the median of the Bollinger Band. Now through the Bollinger Band, inflation is bearish. Through the Ichimoku cloud, because inflation is moving above the Ichimoku cloud, this means that the inflation is bullish through the Ichimoku cloud, right? Now comes the important part. Important part is the MACD. If you look into the MACD, both MACD is less than the signal. MACD is less than the signal. This means that the inflation is bearish through the MACD, right? Now comes this the divergence. Okay, it is normal, not a problem. Volatility, yes, volatility is still high in the for this the inflation, and it is further increasing for the inflation. This is not good for the inflation. High increase or heavy volatility for the inflation means that you cannot trust this the decline in the inflation, right? Then this the directional momentum. Directional momentum is still supporting this the bearish trend in the inflation. Okay, now let's talk about the most important part. Most important part comes here. This is the stochastic RSI. Stochastic RSI, once again, if you have subscribed to my channel for last many weeks or months, or if you are my YouTube community member, then we know that how the stochastic RSI works and what happens when the stochastic RSI goes absolute 0 or absolute 100. It has the potential to change the picture of the entire stock market, right? What you are going to notice in this, here in this the stochastic RSI, that both the K channel and the D channel are absolute 0. Absolute 0 means the inflation has hit the bottom, absolute bottom, even though it is 6.5, okay, but technically it has hit the bottom. This is the bottom, okay. This means that now from the next month, in the month of February, or either in the month of February itself or anytime after the February, you are going to see a heavy increase in the inflation. Heavy increase, I repeat, you are going to see a heavy increase in the inflation. Heavy increase, 10 to 20% increase in the inflation. This will happen technically, okay, and I have shown you, okay, and I've given you this the reason, because the K channel is trading, okay, K channel is trading like this the absolute 0 for last 3 months, continuously for last 3 months, and now the D channel is also 0, okay. This is not good for the inflation, and this is not good for the stock market, for the economy, because the inflation, we can clearly see, and it is confirmed through the technicals, that the inflation here, okay, it has seen the bottom. It has seen the bottom, right? Technical bottom. This is that, see, bottom, okay, as such the bottom will come when it will hit 0, or or there's the 1%, not 6.5, but technically it has hit the bottom. Before it can come down any further, it has to give a bullish reversal. It has to give a bullish reversal, it has to move up, then only thereafter, okay, these circumstances will be there, okay, something in this the economy, okay, then only it can come down. So it is never like this that it will come down, run up. Okay, it has to take a break up and this the down, right? Similarly, like it was moving up, and then a hold, and then only it moved up, and then a hold, then moved up, then, okay, like this. So this is the natural flow of anything, right? This means that now be ready to see a reversal in the inflation anytime, as early as in the month of February, as early as, because technically we have seen that it has hit the bottom, okay. Now if it comes down any further in the month of February, if the inflation further comes down in the month of February, in that case, that will be the second consecutive month, okay, where we will notice that the inflation, okay, it is trading at the absolute bottom. That is why I'm saying, either in the month of February, if not in the month of February, then the month of March, be ready to see a surprise. Be ready to see a surprise increase in the inflation. A surprise increase in the inflation, right? So this is how the things work. Whenever the inflation will see, or whenever the inflation will rise, by like 10 to 20. Again, this rise in the inflation, it will be heavy. It will be like 10 to 20% minimum. Okay, because of this, the rise in the inflation 10 to 20%, the stock market will bearish. It will go bearish. A heavy fall, a very, very heavy fall in the entire stock market, right? That is the reason why I am saying that the upward movement that you are seeing, this is the short-term bullish movement, and it is going to form a lower high. This is not the long-term bullish trend, okay? Because this thing is happening somewhere in the background, right? So guys, we have seen this, the CPI data, core CPI data, this the technicals, what the technicals are saying, and how, and we have seen that there is a bottom, technical bottom, that the inflation has hit the technical bottom. Now, anytime, or means from this, the February itself, we can see a reversal in the inflation. That reversal will be 10 to 20% or even more than that. That will simply help the stock market to fall heavily. Okay, within a day, within 2 to 4 days, it will fall heavily. Okay, 7 to 8%, 10%, even 12%. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want the daily analysis, the daily updates of the S&P 500 from Monday through Friday, and the probable movement of the S&P 500 on the daily basis, then you can join my YouTube community, and you can use the join button in order to join my YouTube community. This is there just below the title of the video, that is S&P 500 Technical Analysis. Now guys, let's talk about the third point of the agenda of our S&P 500 Technical Analysis, and the third point is the support and resistance levels. Okay, once again, the support and resistance levels, okay, that I tell you here, okay, for the S&P 500, these are my calculated support and resistance levels. These are not the standard pivot levels or or any other level that you can find through any other technical indicator, right? Now guys, we are here and this is the third point of our agenda, and this is the support and resistance levels for the S&P 500. So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, the daily probable movement of the S&P 500 from Monday through Friday, then you can click on this, the join button that is there just below the title of this video. So now guys, this is the support and resistance levels for the S&P 500. If you notice that the closing of the S&P 500 was around or was almost at 4,399. Okay, this means that the immediate support that the S&P 500 is going to get is at 3990 or 3991. What is there at 3990? We have this the calculated support level, and other than that we also have this the 200-day EMA. So these two things are going to provide very good support for the S&P 500. If you notice that on Thursday, these two things were there in the picture, okay, that has forced the S&P 500 to come down. Okay, then there was this the gap down open, okay, on Friday. But now the same things are going to provide this the good support for the S&P 500, the 200-day EMA and the calculated support level 3990 and 3991, right? Any upward movement is now going to see, so there is a kind of this the vacuum, okay, between 3990 and 4035. Okay, means that now S&P 500 has better chances to move up to what? To move up to the zone of 4035. Remember, this is the zone, and this is a heavy zone. This is a heavy zone. This means that as such, S&P 500 is not expected to breach and to move up and up. Okay, after hitting this the zone, because once it hits the zone, then it has to spend some time, 4 hours, 1 day, 2 days, 3 days, okay, some time, okay, at this the zone before it can actually move up. So what can happen is that it can move up and then it will give up, it will come down, then again it will retry, and then only it will be able to breach. Okay, this is how it is expected. So I'm going to cover this part in the fifth point of the agenda of this S&P 500 technical analysis, in the probable movement, okay, in that part. So that is there now. Yes, so this is the zone of 4035. It is a strong zone. After that we have 4065. Okay, this is the level 4065. Now comes the most important part. This is the 4110 and 4100, 4100 to 4110. Okay, this is going to create a very strong hurdle for the S&P 500 if S&P 500 comes around these points. Okay, see, S&P 500 is not going to hit this the 4100 within a day or two. No, first it has to come down, and I will tell you that why it will be coming down, okay, in the last point. Because if you notice that the last time it tried to move up, but 4100 was this the point, it failed, and then it came down. Okay, again 4100 and 4110 is going to create the same problem for the S&P 500. And this means that as soon as it hits the 4100, there will be a reversal, an immediate reversal. Okay, but if the S&P 500 is able to sustain, then only it can try for 1 or 2 or 3 days. Okay, then only it will be able to move up. Okay, otherwise no, it will not be, right? So in the next week, it is expected that if the S&P 500 try to move up, then at most it can move up to 4100, and again it is expected to give up. Okay, and this, right? Anyways, but still, okay, in now there is, however, the chances are less, the chances are thin. Okay, but if it is able to breach for some reason, okay, although no big giant, okay, no there's a big company is going to post earnings, okay, that is going to help the S&P 500 to move up. But if there comes, some news, okay, something, okay, that can, and if that helps the S&P 500 to breach this the 4100 or 4110, in that case the S&P 500 will be able to move towards 4150, 4160, final resting place for the S&P 500 done. Okay, now comes the support. For the support, if you notice that we have the 3990 and 3991 immediate support. Then we have 3960, okay, or 3955. If you notice that this is the boundary of the Ichimoku cloud. Okay, boundaries of the Chimoku cloud, okay, whether bullish or bearish, always give some kind of resistance and the support to the S&P 500. Okay, not just S&P 500, but to all of the indices like Dow Jones and Nasdaq, okay, and all of the stocks. Okay, this means 3955 or 3960 is going to act as good support for the S&P 500. Thereafter, if it comes down, then again there comes the 3937. This is a strong zone. The 3937 is a strong support zone. Whenever it comes down, it is going to find a good, this is the support, okay, here in this the zone of 3937. Okay, and it is going to hold, in this the zone of 3937, and then only it will see a reversal. Okay, but if it fails, then it will further come down. It will further come down to what? Sorry, it will further come down to the 3907. That is again a strong, okay, a good support. Then comes this the strong support, okay, at 3884. 3884 is the strong support for the S&P 500. Okay, thereafter 3840. If you notice 3840, okay, this is the picture 3840. I have repeatedly mentioned 3840, and if you have subscribed to my channel for last many weeks, this is what I told you about the 3840, okay, in very detail. This means that any fall here in the S&P 500, even in the worst case, the 3840 zone is going to hold the S&P 500. This is the downward movement. Now, from the 3840 to 3805, okay, 3840 to 3805, okay, this particular zone is going to hold the downward movement, the heavy decline in the S&P 500. The S&P 500, okay, it will find very good support. It will hold. It will give some kind of, it will try to give some kind of reversal. And after spending some time, a few days, then only it can come down. Okay, S&P 500 cannot breach and cannot come down directly. Okay, means without respecting the 3840, 3805. It must first has to respect. Even if it breaches this the zone, it will give you a reversal, retrace back to the 3840. Then only it will come down, right? 3805, then 3790. Okay, these are the support and resistance levels for the S&P 500 for the coming week, right? Now guys, let's move on to this, the fourth point of our agenda, and this the fourth point is the S&P 500 technical analysis on the daily chart. Remember, I told you that the long term is the bear trend. So this is the bear trend, the long term bearish trend, and now we are in the short term bullish trend. So this is the short term bullish trend. It will come through this, the fourth point, that is the S&P 500 technical analysis on the daily chart. I will tell you that why I am saying the short term bullish trend, what will the impact, etc., what the technical indicators are saying. So guys, before I proceed further, I have this important information to share with you, that if you want these, the daily updates, the daily analysis, the daily probable movement of the S&P 500 from Monday through Friday, in that case, you can join my YouTube community. And if you want to join my YouTube community, then you can click on this, the join button. So once you click on this, the join button, that is there just below the title of this, the video, that is S&P 500 technical analysis. So once you click on this, the join button, then this pop-up will open. Now in this pop-up, you are going to notice that there is all midweek updates. So what is this, the midweek update? Midweek update means the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything. The pre-market update, the post-market update, okay, this is the first, second, third updates, etc. So once you click on this, the join button, you will be able to join this, the YouTube community. Now, if you notice that many of my members have joined this, the YouTube community for last many months, okay, and they are getting this, the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything on the daily basis from Monday through Friday. So again, if you want to join my YouTube community, you can simply click on this, the join button, and you will be able to join my YouTube community, and you will get the daily updates, the daily analysis of the S&P 500. Now guys, let's talk about the fourth point of our agenda, and this, the fourth point of the agenda, is the S&P 500 technical analysis on the daily chart. Let's see how the S&P 500 is doing on this, the daily chart. So when you look into this, the S&P 500, so first comes the candle. When you look into this, the candle, it is a heavy bullish candle. It is a heavy bullish candle. There is no defined shape, okay, of this, the candle, but it's simply a heavy bullish candle indicating bullish sentiments in the stock market, in the S&P 500, and the same bullish sentiments are there in the Dow Jones and the Nasdaq, in the entire stock market, right? So this is the candle. Other than that, if you notice that this candle looks like that, this candle, okay, it is saturated. This candle looks saturated technically. Okay, so this is we are going to cover here. Now, technically, if you notice, this is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed above the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. Simple. Now comes the moving averages. Finally, on this particular day, on Thursday, there was a confirmed crossover in the moving averages, right? So, because now there is a confirmed bullish crossover in the moving averages and the S&P 500 has closed above the moving averages, this means that through the moving averages, S&P 500 is bullish, right? Then comes the Ichimoku cloud. When you look into the Ichimoku cloud, three consecutive or three successive closings above the Ichimoku cloud, indicating that the S&P 500 is bullish through the Ichimoku cloud. Now let's see what other technicals are saying. So when you look into these other technicals, first comes the MACD. When you look into the MACD, looks like, okay, as of now, it is clear that the MACD is more than the signal. This means that the MACD is directionally bullish. Also, the MACD is positive and the signal is negative. This indicates that the MACD is trying to be bullish. It is not bullish, but it is trying to be bullish through these the numbers. Okay, although it is more than the signal, means it is directionally bullish. Okay, but now through these the numbers, it is trying to be bullish. This means that the S&P 500 is bullish through the MACD. Simple. Then comes the stochastic RSI. If you notice, for last two candles, the K channel of the stochastic RSI is absolute 100. Okay, and D channel is 99. Okay, point something. This means the K is more than the D. Means the S&P 500 is bullish through the stochastic RSI. Then comes the divergence. When you look into the divergence is normal. Then comes the volatility. Volatility is normal, not a problem. Directional momentum is supporting the bullish trend. Okay, so now what we are going to say? We will say that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the EMA, or this exponential moving average, or the moving averages. S&P 500 is bullish through the MACD. S&P 500 is bullish through the stochastic RSI. S&P and there is a directional bullish momentum in the S&P 500. S&P 500 is 100% bullish, absolute bullish through the technicals. Absolute bullish. And this is exactly what I told to my YouTube community members, okay, on this date itself, Wednesday, in the final update, that now it is absolute bullish, but we will wait for the second consecutive closing. There was a second consecutive closing, means the absolute bullish. So now S&P 500 technically is absolute bullish. Now, this absolute bullish does not mean that the S&P 500 is now going to move up to 5,000, 6,000, 7,000. No. This simply means that the S&P 500 is in the short-term bullish movement. I repeat, S&P 500 is in the short-term bullish movement. It is not the long-term, it is the short-term. There is a long-term bearish movement we have seen on the weekly chart. On the daily chart, there is a short-term bullish movement, and then again it will be down. Okay, so it moved up, then down, then moving up, then down. Okay, this is how it is going to work. It is in the short-term bullish movement in order to form a lower high. That's it, nothing else, just the lower high. Just the lower high. Okay, and what we do on the lower high? We sell. Simple. Okay, so these, the investors, the big investors, they patiently, okay, they wait for the opportunity, just like this, the lower high. Once the lower high is seen, they will sell and they will make a lot of money. Okay, this is how it works. Now guys, let's talk about the fifth and the last point of the agenda of this S&P 500 technical analysis. And this, the last point of the agenda is the S&P 500, this is the probable movement of the S&P 500 in the week of January 17th, 2023. Means from January 17th, Tuesday, to January 20th, Friday. Let's see how the S&P 500 is going to behave. Now guys, in this, the probable movement, okay, you need to notice a few things. Okay, number one, the stochastic RSI last two candles, K channel is absolute zero. Sorry, absolute 100 means absolute saturated. Okay, but the D channel is non-zero. This means that there might be, I'm not saying that there is confirmed, but there might be still, some this the bullish. Okay, this is the bullish momentum lap or bullish momentum. Okay, or we may see, okay, a little this the bullish push in the stock market, maybe like a gap up open on Tuesday, or irrespective of any open and upward movement in the S&P 500 on Tuesday. But this is not the whole picture. Okay, let me show you. Okay, what is there? This is the chart of Nasdaq. Nasdaq. Okay, Nasdaq is an early indicator to all of these indices. What you are going to notice on the chart of Nasdaq is that Nasdaq, the K channel of the Nasdaq is trading. Okay, for last four candles, K channel is trading at absolute 100. Now, that was okay. But now in last two candles, the Nasdaq is trading at absolute 100. Absolute 100. Okay, this is indicating, or this is saying that the indices are super saturated. Super saturated in the bullish movement, in the bullish side. This means that now the indices are going to give up. Okay, I'm not saying that there will be a fall and a continuation of the bearish trend. There may be, okay, but that is subjective. Okay, for now we are going to see a decline, a red candle, okay, a downward movement in the stock market, in the S&P 500, in the Nasdaq and the Dow Jones. Okay, but it will be the Nasdaq that is responsible, or that will be responsible for this downward movement in the entire stock market, because it is trading for last two candles, it is trading at these the absolute levels, 100 each, K and D. Okay, now what it means? It means as early as on Tuesday, there may come this the bearish movement. Means we can expect, okay, a gap up open, or irrespective of any open, okay, initial, just like 5 minutes, 15 minutes, okay, or so, or 1 hour, and an initial upward movement in the stock market, and then a fall. Then a fall. Why there will be a fall? Why there will be a fall? This fall will be there because the technicals are super saturated. K channel and the D channel are trading at 100 each in case of the Dow Jones, but in case of in case of the Nasdaq, but in case of the S&P 500, the K channel is 100. In case of the S&P 500, Dow Jones and Dow futures, K channel is 100, but it is only the Nasdaq where the K and D both are super saturated. Okay, this means that all of the indices are saturated. So this downward movement will be there in order to cool down the technicals and nothing else. It will serve no other purpose, okay, other than this, just to cool down the technicals, right? This is what we know. Other than that, what we can see is that on Tuesday itself, there may come a gap down open, and then and then immediately upon open, okay, it can come down. Okay, means on Tuesday there is a heavy probability of seeing a bearish candle. On Tuesday, on January 17th, there is a heavy probability of seeing a bearish movement or a bearish candle. If it doesn't come on Tuesday, then on Wednesday, confirm. Because if there comes a bullish movement, a bullish candle on Tuesday, then it is like 99 or 100% confirmed that on Wednesday, on January 18th, there will be a downward movement. There will be a confirmed bearish movement or a fall in the entire stock market. Okay, 1% or more than 1%, 1 to 2% fall. Okay, this means as of now, the upward movement that we are anticipating here, okay, this movement is going to be limited to 4035. So if on Tuesday, if there comes a gap up open, in that case, stock market can try to move up to 4035. It will hit, it will fail. It will fail, and then it will come down. It will come down to what? It will come down to first to the 200-day moving average, okay, or this the 3990, 3991. If it breaches, then it will be coming down to here, okay, to this the boundary of the Chimoku cloud, 3955 or 3960. Okay, now this will be able to hold, this will be able to support this the fall in the stock market. Okay, now in this the S&P 500, Dow Jones and the Nasdaq. Now if most likely it will be able to survive here, then from here again it will resume its bullish journey. Okay, but for the entire day it can remain bearish, and then for the next day again it can remain bearish, or it can try to show some these the bullish moves. Okay, and so see guys, again the zone of 4035 is a very strong zone. Okay, as of now S&P 500 is not permitted, it is not allowed to breach the zone in one go and then move up and move up, move up. Even if it breaches the zone in one go, then again the next day there will be a fall, next day there will be a fall. The zone will be re-respected before the S&P 500 can further move up. In simple words, right? The zone of 4035. So because the stochastic RSI K channel, okay, we are expecting a fall either on Tuesday itself on January 17th or on Wednesday, that is January 18th. But there will be a fall, there will be a bearish movement. Even if there comes a little bearish candle, doesn't matter. Okay, there will be this kind of candle. Okay, however, I'm anticipating, okay, this is a heavy candle, heavy bearish candle. So that will help these the technicals to cool down. Okay, simple, nothing else. So this is with this the upward movement. So whenever it comes down, it will again retry, and then after 1, 2 or 3 trials, it will be able to breach the 4035. Then it will move towards 4065. Okay, and then there will be okay, this the next part, the final resting place. Okay, 4100 or 4110. As of now, as long as S&P 500 is trading below 4035, the chances are that it will remain bearish or it will go bearish. Okay, so if it closes above this, the 4035, 2 consecutive days, again 2 consecutive days, then only we can anticipate a further upward movement to 4065 to 4100 and 4110. In an exceptional case only, there comes like some good news, see, no company is going to post, or no giant is going to post this the significant, okay, means the earning. Okay, and yes, there are companies that are going to post the earnings, but these companies do not have that much weightage in these indices other than the GS, the Goldman Sachs. Okay, so if there comes like some news from somewhere, some good news, some exceptionally good news, then only the S&P 500 will be able to breach the 4100 and 4110. Else, so first the lower high is going to form here at the zone of 4035. Okay, a fall. If the S&P 500 breaches this, the lower high, this is the 4035, okay, this particular zone, then the next lower high is expected to form, okay, here at 4100 or 4110. Okay, any breach of these chances are very extremely thin. Then the next, this is the final resting place. That's it. Okay, but in the coming week, it is not expected. Anything beyond 4100, 4110 is not expected. But next week, yes, there are chances. Okay, but that will be a different story, because for that we need to analyze the next 4 candles that are going to form. Right, now comes the downward movement. In the downward movement, again, as I mentioned, that there will be a fall, there will be a bearish candle. Okay, now you can use this bearish if the S&P 500 is able to survive here above 3955 or above 3990. Okay, in that case you can use this as an opportunity to go bullish, but bullish in the short term for 1, 2 or 3 days, 4 days. Okay, that's it. Okay, not for this long. Okay, this is a long period of time. So you can plan this the bullish trade only and only if it is able to survive above 3990 or above 3955. Means if it is closes above 3955, even with, okay, even after going bearish, if it is able to survive, okay, then only you can plan your bullish trade. Right, now when it goes bullish, okay, then again you must use a tight stop loss, so that if there comes, okay, a sudden fall, then you'll be able to, okay, exit, okay, in time. Now, if you see that the S&P 500 is giving up, it is not, or it was not able to hold, rather it is coming down. Then further it is coming down. Now it has closed inside the Ichimoku cloud. As soon as it closes back inside the Ichimoku cloud, now this thing is almost confirmed that now there are these the heavy bearish sentiments. Okay, it tried to move up, but it failed. So it is now back into the cloud. Again, we are waiting for the closing. We will always wait for the closing. Okay, we always consider the closing of the market. That's it. If there comes a closing in this Ichimoku cloud, this means that now most likely market has given up, and now it is going bearish. It is simply going bearish. Okay, now whenever it want to go bearish, first of all, it is going to find some good support, very heavy support here in the zone of 3937. The zone of 3937 will be able to give the good support to the S&P 500. S&P 500 will spend some time, okay, here. like 1 day or 4 hours, not 4 hours, but at least 1 day here, okay, on this the zone before it can, so you can clearly see that there was a reversal, okay, it came down and then there was a reversal, okay, again it came down, a reversal, okay. So it is going to spend some time, 4 hours, 1 day or 2 days, okay, on this zone. Then, and if it breaches this the zone of 3937, then it will be coming down. It will be coming down to what? It will be coming down towards this the zone of 3840. Okay, because there we have the 3884, okay, it is a strong support, okay, but the heavy support or this the final support lies here 3840 to 3805. Okay, so there is a kind of virtual vacuum. It will come down to 3884 and then to this. Okay, this means that in the next week the entire movement of the S&P 500 is most likely to be confined between the 4035 and the 3937, the zone of 3937. Okay, this will be the primary focus of this market, okay, of this the S&P 500. Other than that, in the other case, in the second case, it will be between this the 4100 and the zone of 3937. Okay, the zone of 3937. Okay, this is the secondary case, the tertiary case between the 4100 and this thing. Okay, this heavy, okay, this the heavy between 3840 and 40, okay, 35. Okay, this is the movement. So this is where the movement of the S&P 500 is most likely be constrained, okay, first, second and third. Okay, these are the following cases, right? And guys, whatever will be happening here, okay, in this the S&P 500 on the daily basis, so through these the daily updates, daily notes, okay, probable movement of the S&P 500, okay, I will tell you that what is expected to happen, what is happening, and what we can expect, okay, on this the daily basis. So if you want to join my YouTube community in order to get these the daily updates, the daily analysis of the S&P 500, then you can click on this the join button that is there just below the title of this video, the S&P 500 Technical Analysis. You can click on this the join button and you can join my YouTube community. And guys, other than that, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. And guys, if you like this video, then hit like. And if you have any questions that you want to ask, then please feel free to ask. You can write your comments, okay, in the comment section, right? So guys, this was my S&P 500 technical analysis for the week of January 17th, 2023.